What is up? Welcome to the November 2024 market update. And before we get started, I want to send some deep condolences to our friends over at the large postcard makers that have had such a great run this election season. I'm very sorry this has come to an end for you guys, but for the rest of us, I think we're all can happily say that the election cycle is officially over. Hopefully you're still talking to your friends and family and neighbors, and Thanksgiving and Christmas are going to be okay this year. For us, if any of you have decided that now is the time to flee the country, please call us. We'd love to help you sell your house. So, all kidding aside, hope your holiday season off to a great start, your Thanksgiving, all of that great stuff. It's been a wild ride. If you've been paying attention to the market since the election, we've had a Fed rate cut of a quarter point. We've had some appointments. We've had our bond market go crazy. Actually, interest rates for mortgages go up. All kinds of banana stuff is happening. The stock market's at a record high. And I just walked out of an appointment with a potential seller, and his sentiments kind of echoed everyone. He's like, dude, what do I do? And honestly, as we talked about last time, I really have no idea. What I can say is, if some of the things that have been kind of kicked around during this election cycle happen, there's a good chance that there's going to be some inflationary pressure. In other words, the cost of things might start going up again. That's kind of funky because the Fed is working really hard to try to get the cost of things down. So we had 2 inflation readings this week. Our inflation annualized around that kind of 2.4. The Fed's stated goal is 2. So we're still a little above, but obviously compared to when we were having 7, 8, 9% inflation, we're doing a lot better. The concern is the next, we'll call it regime, that's coming in has a lot of power because they're controlling all the branches of government. And so anytime political parties aside, anyone controls all the branches of government, it's a little bit like having a bunch of professional owners of sports teams not having a salary cap. It gives them the opportunity to go wild. And when spending goes up and the deficit goes up, obviously that puts pressure on inflation. In other words, it makes money worth less. The interesting thing is going to be, if you're not aware of this, the Fed chairman is appointed and he can't really be fired technically. No Fed chairman's ever been fired. It's technically illegal to fire the Fed chairman. And everyone's kind of staring at Powell now because they think he might be what stands between Trump's policies that would be massively inflationary and kind of some normalization, I guess, of the market. And what that means is that we might not see as many interest rate cuts as people were thinking or hoping were going to happen. Because if they cut rates and we cut taxes and all these things happen, all of that does is it creates inflation. It makes money, worth less. So it's going to be interesting to watch that kind of dance between Powell and Trump as this administration takes over and see what happens with it. If you're thinking about buying or you're thinking about selling, it's a funny time right now because it's the holidays. But normally this time of year, we actually start to see our inventory go down a little because people take their home off the market for Thanksgiving and Christmas and New Year's, and they don't want to deal with it during the holiday. So the fact that we're going up a little bit kind of indicates to me that there's kind of some sellers that have been sitting on the sideline, maybe waiting for things to happen, maybe waiting for this election to end, stuff like that, and they're entering the market now despite the holiday. Right now, we're still staying balanced like we kind of have been. Again, we're putting plenty of houses under contract. We're still seeing houses with multiples, but we're also seeing some houses, the overpriced ones and less desirable ones, sitting for longer and longer. So the pricing's really critical. If you're a buyer, you've probably noticed we're seeing mortgage rates ticking back closer to that 7% range, where we were ticking down closer to the 6% range. We might be stuck with interest rates kind of hovering between 6 and 7 next year, which likely means we're going to have a similar year next year as we did this year. Pretty good if you're a seller and you have a nice property. Pretty good if you're a solid buyer with a decent down payment. You're probably going to feel okay about this because you're going to have more choices than you did a couple years ago. So overall, I think that this is what we're going to see next year, unless something dramatically changes. As always, the devil's always in the details. Real estate's always local, and really it's hyper local. Neighborhood to neighborhood, house to house, city to city. So if you have any specific questions, please reach out to us. We love to chat, see how we can help. Hope you guys have an amazing holiday. Until next time, take care.